Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview presentation. And yeah, this morning here in Switzerland, we want to talk to Australia, to OceanaGold. And we have for the first time the new CEO, Gerard, with us. How are you? Yeah, good evening to you, Gerard.
Thanks, Jochen. It's good evening and good morning to you all. It's great to be here. Thank you for the opportunity.
Yeah, thanks for taking the time. Of course, it has taken a bit of a while that we can now talk together, but that's absolutely normal for such a big company as you are, such a great gold producer with almost 500,000 ounces a year. And of course, we have just been in Munich at Edelmetall. Also, we had questions about your company. And overall, it looks quite good. So how satisfied have you been with the year overall, and especially with Q3?
Look, I've been delighted with how we're going this year at so many levels. Firstly, it's been our safest 12 months in the history of the company. 2.3 injuries per million hours worked. That's low by any company's standard in any sector, also the gold sector. So really pleased that our people come to work and go home safely, and that's the most important thing, because it also is a great predictor of your ability to safely and reliably and responsibly get the gold out of the ground. And I'm pleased to say that at the 3/4 mark of the year, we are spot on 3/4 of achieving the midpoint of our guidance. So and we know it's really important for shareholders for us to deliver on our guidance. It's a big commitment. Shareholders will take their own view on gold price, copper price, even exchange rates. But what they really rely on management to do is deliver gold production guidance and of course cost and capital guidance as well. So we're on track for that, which is really pleasing. The third quarter, we knew at the start of the year, and we flagged this way back at the start of the year, that it would be our weakest quarter. That's grade profile driven across our mines, and it played out that way. But we have reaffirmed that we expect to achieve production guidance. Again, back to that all important deliverable. We're doing so safely. The costs were like everybody, and I'm sure we'll talk about it a bit more. Inflation has been a challenge on the cost front, but no, we're going well. Thank you.
Yeah, cost would be exactly my next question, because I see here in your Q3 presentation, the AISC was group guidance for 2022 is $1,375 to $1,475. Let's put it that way. The world average, I think by October this year, is approximately $1,280 per ounce. So you are a little bit up to the average. Is there a possibility that you can get back to, let's say, below the world average?
Oh, look, I mean, our guidance for the year for costs is, between $1,375 and $1,475. So we expect and are targeting to be inside of that. That's a bit more elevated, probably because we're yet to transition into the high grade material at Haile, and as we outlined at the start of the year, it's when we can get underground into Haile and get more of the ore feed that is high grade, and without the waste and rehandle movements that we get at Haile, you really do see the leverage of gold production and a projected lowering of the all-in sustaining cost of this company over the next 3 years. And that's really exciting. We have this wonderful combination of high gold production and a reducing all-in sustaining cost on the basis of that Haile underground ore feed coming into the mix over the next 3 years. That's what powers our growth, and it should be, all other things being equal with the gold price, it should translate into an increase in free cash flow as well.
Okay, super. So that means, if you're talking already about free cash flow, strong liquidity, cash is quite good, I would say. And how is the debt situation of the company?
Yeah, I'm really pleased with our capital structure. We have a $200 million of drawn bank debt, but we have $130 million of cash on hand. And the difference that puts us into a net debt position of $174 million are the equipment leases that we have across our site. Some companies don't add the equipment leases in their debt. We're making it very transparent and clear that our net debt position, inclusive of all the equipment leases, is $174 million. So our gearing, if you think of a gearing ratio, I think it's below 10%. And from a leverage ratio, which is a lot of what credit providers tend to look at, it's less than 0.5, like 0.5. It's a low leverage ratio. So we're covering our debt nicely at this point in time.
Okay, cool. Great. Let's move to Haile, because I think that's a really interesting thing. You're moving from open pit also now to underground. Yeah. I've seen this in the US many times, and it's really interesting that all of a sudden you're digging the hole in the open pit in the bottom, and all of a sudden it works and gold is coming out again. So that is fantastic. The SEIS was published. What is still missing? Do you have all the permits, water, etc.? Is that all fine now? And you also the early underground work has commenced, right?
Yeah, no, great question. So we have the SEIS published, as you say. What remains are three things, in fact, four things: a Section 404 certification, a Section 401 certification. Both of those relate to compliance with the Clean Water Act. Then there's a final record of decision, and that comes at the end of those other two certifications, and then the mine permit. So we do have the Section 404 certification. We announced that we received that about 2.5 weeks ago. That was just pending some requests for review, which didn't eventuate. So we have that in hand. We also have the 401 and record of decision to come shortly. That is issued by a different regulatory body called the Army Corps of Engineers. We hope to receive that shortly. And then once those three things are in hand, then the final thing remaining relates to the mining permit. And our engagement with that regulatory authority, the South Carolina Department of Health and Environmental Control, has been excellent. And we're confident we'll get that in the final quarter of this year. In the meantime, as you said in your question, we did receive approval from DHEC to commence up to 180 meters of the production decline and a combined 120 meters of the two ventilation portals. So we're actually on the way, pending receipt of those final permits. And we, as we said in our quarterly, we expect that we'll be producing first ore from underground in the final quarter of 2023. So we're in a good spot.
And when do you think you can ramp up to full production potential there?
Well, gee, I mean, once we are underground and operating from 2023, the final quarter, it'll be just the rate of haulage to surface. It's so the percentage of ore feed in 2023 is pretty low, but I think for the next 4 years, which is what we've projected so far, the percentage is around 20%. Jochen, I don't hold me to those numbers precisely, but it's around 20% of the ore feed. But because this ore grade is more than double of what we're currently getting out of the open pit, and it doesn't have any of the waste and rehandle costs associated with the present open pit, the translation into a reduction of cost and the generation of free cash flow out of Haile is quite remarkable.
So that would help in the overall, let's say, situation to bring down the group AISC.
Correct. It's actually the primary driver over the next 3 years, and I think we've got our gold production growth over the next 3 years is something in the order of 25-30%, and our all-in sustaining cost is going from, say, a midpoint of high 1300s this year to something closer to 1050, which is in about 3 years' time. That's what we showed the market in February. Now we have had some energy cost and inflation that everyone has experienced, so that might alter the final number. But the rate of reduction we still expect to be consistent with that dramatic increase in grade, increase in production, which because it lowers the denominator. It increases the denominator, lowers the overall unit cost.
Okay, great. So with the knowledge of today and what you guys have seen so far in opening up all those portals and stuff, how do you think would this rate to the mine life Meaning, what mine life would you expect underground for Haile in a
Well,
conservative way?
yeah, look, well, conservative, we put those numbers out, and I think it contributes to a mine life of something into for another, like about a decade. But that is all predicated on us only projecting in the public domain that which we can get from the indicated reserve or resource, the indicated resource. So what we are doing now is do more drilling to try and expand the Haile underground ore body. The horseshoe underground, as we call it. We have an extension target, Haile exploration extension target. Palomino we're looking at, and areas further underground, because any ounce that we can add to that production profile beyond what we've put in the public domain will go to extending mine life and improving the economics along the way.
Okay, let's move to the Philippines, because I think this is one of the jokers of your company, and it's, to my understanding today, not really fully valued in your share price. I think people still don't understand that the Philippines will contribute substantially now to your company or to your group. And it was, for me, it was really something like where I said, wow, finally the gains start. That's fantastic, because you have also a nice amount of copper, and copper is something where I think over the next years will go massively higher despite the gold price. So it's a win-win situation. So how has TDPO performed in Q3, and with the overall situation, is everything like you wanted it?
Yeah, look, I mean, they have performed really well. I mean, it came after a period of suspension. It came back into operation fully in November, about 12 months ago, and it achieved full operation close to a month earlier than expected, and that was in Q1 of this year. And they haven't dropped the ball since. They have performed exactly as we would have hoped, safely again, and bang on budget, bang on in line with guidance. Some increase in energy costs that we've experienced. Again, I'm sure we'll touch on that a little later. That's probably been the only challenge it's had. But as you say, it produces copper as well as gold, and that makes it one of the lower cost gold mines in the world because of that copper credit. That we're getting two metal sources from the one activity, and it's a very cash generative business. And to your point, maybe people have to see that consistent performance for a few more years yet to fully value it in the share price. But we have a great team there. They're doing really well, and it's a core asset in the portfolio.
Fantastic. I see also you have a guidance for, let's say, gold production, gold sales, 110 to 120,000 ounces for TDPO and 12 to 14,000 tons of copper. That is fantastic. Do you intend to raise the output? Maybe is it possible even, because I see here the AISC were in Q3 $913, which is fantastic for the group AISC, of course, and the guidance was $600 to $700 for the full year. Can you enlarge the processing facility, milling, whatever, production?
Yeah, look, I mean, that's absolutely something that we have the potential to do now. We had an increase in the permit during an early half of this year. Our previous permit allowed the mill to operate at 3.5 million tons per annum. Now we can operate at 4.3. Our guidance was set assuming that we would achieve that for the year and that we would mine 3.9 million tons this year. So there is a bit of capacity in the mill. There also we're mining from underground and using a lot of above ground open pit stockpiles. So anything we can do to get more underground ore, which is higher grade, will also have the effect, combined with any increase in milling, to allow us to produce more gold. And that would have a positive unit cost and cash generation effect. And then, as you know, the copper price, depending on what that copper price is for the constant amount of copper, you can either get a more or less a credit, which translates directly into a lower all-in sustaining cost.
Okay, super. Yeah, then let's move to Macraes. You had a record rainfall in July. What happened there? Yeah. I mean, the weather we cannot control, thank God.
Yeah, look, it's you know, they've been measuring rain there for a couple hundred years, I believe, and it was record heavy rainfall, and that's just, you know, we have underground and open pit operations, and we were just unable to operate safely there for given that, you know, the muddy ramp conditions and the water that we were dealing with. That's passed. The site is incredibly resilient. It's the oldest mine in our portfolio. It's the foundational asset of the company. It's very low grade, and but somehow the site is, they're very resilient and innovative, and they you know, they're on track to produce in line with their guidance indication at the start of the year, and hopefully, particularly with the benefit of a lower New Zealand dollar, generate some cash. But it's been a tough first half of the year for them, but you know, we're confident they'll bring home a production number that'll put them inside the guidance range.
Okay, yeah, because the AISC were $1,924 per ounce, but I could imagine, first of all, the rainfall was one thing, but on the other hand, you had a planned mill shutdown and maintenance, which you have completed. That is all fine. So now you're back on track.
Well, yeah, we said across the portfolio that we thought our production profile would have like a happy face for the start. For the year, the first quarter was going to be a strong quarter, and it was, and we expected our last quarter to be strong, which was a combination of both grade profile and then, of course, completing mill shutdowns and the like that you just referred to at Macraes. So we expect our fourth quarter to be a strong quarter, certainly stronger than the third quarter. You know, and allow us to, as I said at the beginning, to finish inside our production guidance range.
Great. So Waihi looks to me really interesting because you're really moving that forward, and you have like a 67% quarter-over-quarter improvement in gold production. But I really like to see is a 40% reduction in AISC. So what can we expect for the next for the running quarter already? Still all good?
Yeah, look, I mean, Waihi had a really challenging first half of the year. It wasn't a good half. So the improvement that we reported and that you just spoke of for the third quarter was what we needed to basically ensure that the operation, you know, pays its way. So it was free cash flow generative in the third quarter, and we expect the fourth quarter to be another good quarter. So from the perspective of Waihi alone, you know, its gold production for the year will be lower than what we said it would be at the start of the year. From a group perspective, that's been offset by outperformance at Haile and strong performance at the TDPO. So we achieved the group production guidance, but Waihi has had a tough year. What we have said is, though, that some of those factors that contributed to it being a challenging first half of the year, being us operating in areas that had a really low confidence level of all being present there. We've done the grade control drilling to give us a high degree of confidence of where we're mining in the third quarter and the fourth, and for the whole of 2023. So we expect the fourth quarter to be another good quarter. We expect 2023 to be better than 2022, and we expect 2024 to be better than 2023. So a real dip year. A dip year for Waihi, but certainly better days ahead. And you know, it's the smallest operation in our portfolio, but what's really exciting about Waihi is that it's the processing plant that is proximate to Wharekirauponga, which is our, you know, wonderful ore body, high grade. That's you know, 10 kilometers away from the mine, which we aim to develop and convey underground all the way to this existing process plant. And so when we can access what we hope to be, subject to drilling and confirmation, a multi-million ounce resource at what we hope to be double-digit grams per ton ore, that's going to make Waihi a meaningful contributor to OceanaGold for many years to come.
Yeah, and I would say not only for the growth, but also cost-wise.
Oh yeah, exactly. When for the same activity, and you're putting through twice the gold grade,
Helps a lot.
It improves the economics enormously.
Absolutely. Inflation is a theme where we are reading every day in the media and in the press, and of course we are all feeling it when we fill up our gas in the car, etc. So do you have taken any special action or measurements to fight a bit against inflation? Meaning, are you doing contracts for diesel, for example, or do you try to buy things forward so that you have more spare parts there, building a storage, something like that?
Well, look, it's a great question with a slightly complicated answer. In the first half of the year, for example, we were probably stockpiling more in the way of goods because New Zealand was still experiencing COVID because it was one of the last countries to come out of a very restrictive entry and exit regime. That's since normalized. So we were carrying elevated stock levels for a period, which in some parts allowed us to insulate ourselves from some of the inflationary effects because we had pre-bought. Across the board, when things cost more, naturally we have to be a lot more judicious in our usage of them. And I'm really proud, for example, of the Haile team. Reagent costs have been much stronger in our industry, much higher, I should say. And the team have done a lot of work to make sure that they are very carefully minimizing their use, but never at the point of sacrifice and recovery in the mill. So it's really attuned their thinking, for example, to making sure that when something costs you more, to ration its use. We've been on the journey, like many companies, to make sure that we don't waste energy. Energy is a big cost in our business, but in some respects, you're either by dint of the energy contract that you have, you're very much a price taker as well. And we have seen energy costs flow through to our cost base as a consequence, particularly in the Philippines. It's what the underlying energy source is linked to market dynamics that have caused us to pay a higher amount than we expected to at the start of the year. Offsetting a lot of this, Jochen, which is uniquely advantageous for our two operations in New Zealand, our operations in the Philippines, and any of our Australian support activities, is that those countries all have operating currencies that have weakened significantly against the US dollar, which has in part ameliorated some of those rising input costs. But certainly energy, fuel, reagent costs, some consumables have gone against us on a net basis, even after taking into account some tighter and more careful usage of the material. To address that, which is part of your question, we have one of our big three programs is procurement excellence, and I'm really excited about some of the things that we're doing there. The company that I joined, OceanaGold, back in April, for historical reasons, never aggregated any of its purchases across the company, even though they were common items. So whether it be grinding media, diesel, explosives and the like, we were just each site was buying its own, and that wasn't aggregating the purchase power or necessarily ensuring that we're getting the best possible outcomes. We now have a program where we're doing that. We're focusing on the biggest spend items first, and we're seeing early signs that that's going to translate nicely to the bottom line.
Fantastic. So overall, 2023 looks very promising, I would say. I mean, gold is going since 3 days into the right direction, and also copper is moving. But it looks to me like that you have set a really strong basis and foundation in your company, also with your growth projects, that 2023 and the following years will bring you well over the 600,000 ounces per year. That looks all fantastic to me. So let's assume everything goes the way you want it. Everything goes well, cash flows are rising. What are you going to do with the money? Will we see dividends? Will we see more M&A, maybe share buybacks?
Look, I'm really keen to get us back to paying a dividend. The company rightly suspended it a couple of years ago when the TDPO, the main cash generating powerhouse of the company, was in suspension. So that made sense to suspend it. Sure. And I'd love to see us getting back to paying a dividend. Obviously, that's a decision that the board will take early next year in relation to 2023 and 2022, and that will depend, of course, on the the final quarter's performance and then the outlook for the company for the future and prevailing gold prices. But we don't. So first point of order, I'd love to see us getting back to paying a dividend. I'd also love to see us, if we have any surplus capital, beyond investing in the projects that we can see, returning it to shareholders via share buybacks is in the market that we're in, judged by them to be a good use of cash, and we will look to do that as and when. To your question about M&A, I mean, it's probably a bit premature for the company to be talking about that. We first want to make sure that the exploration opportunities near our mines or in the jurisdictions that we're comfortable with, we've kept an open mind to it. I think we've had a great track record in exploration in the company. We've got a really good exploration team. So I'd love to see any cash generation that you speak of being invested in adding ounces in the cheapest way possible, which can be exploration. But yeah, if and in time, as and when it makes sense, we'll look to opportunities to grow inorganically, provided that we can do so in a way that gives us the best confidence that that's going to add value to the OceanaGold shareholder. M&A can be a way that you can add ounces, but the value of that transaction flows to other shareholders. So we've got to be really. We have an unusual position because we are able to organically grow in the near and potentially long term with Wharekirauponga our gold production at from a low risk basis because it's organic growth.
Yeah. And you know that all.
Yeah, exactly. So that tends to be the better way to do it. But we also have to be alert to opportunities, and if something that makes sense presents itself as an opportunity, or there's a great strategic fit, or there's a great value opportunity where we have a capability that can unlock the value that someone else is struggling with, we'll look at that. But that's not a near-term priority for the company. Near-term priority: deliver guidance safely and responsibly. Get costs down, maximize free cash flow, get back to providing return to shareholders in the short term.
Perfect. That was a great final sentence, and especially I love to say we are planning on dividends. Great, because I'm a shareholder of the company. I love my dividends. Super, Gerard.
All shareholders like a dividend.
Exactly.
But it's a great discipline, right?
Yeah.
And I like the idea that shareholders get something back. I mean, the primary reason why you would invest in a gold company, and certainly OceanaGold, is for the growth that you would hope to see in the share price. But a dividend is a great sign of respect and a great return for that investment. Again, I look forward to being able to provide our shareholders.
Yeah, I always say it's the paying of the waiting period until the price has doubled. Fantastic. Gerard, thank you very much for almost half an hour. That was a great insight into your company. I'm a happy shareholder, definitely. And keep it going, I would say. I wish you all the best and hope to talk to you soon.
I look forward to that too. Thank you again for the opportunity, Jochen.
Thank you very much. Yeah, ladies and gentlemen, that was Gerard Bond, the CEO of OceanaGold. Yeah, you heard it. The company is on a great path, on a great way. Everything is moving. Of course, the AISC were rising, and they had some hiccups also with the weather, which is absolutely normal in mining, because mining is an adventure business, that is for sure, but also a business with a lot of opportunities. And it looks to me like that the opportunities here with OceanaGold for the next years look fantastic. The outlook is great, and they are solidly financed. They have a good balance sheet, and they are still making money, of course. That's the most important thing, but also they want to bring down the cost further. That is important, and they have a fantastic growth potential. We have done a chart analysis, as you saw that last week probably, and I said if the stock price is not going below 195, everything looks good. Stock price today is above approximately 225, 230, so we were quite correct with that. We set a first price target for OceanaGold of $4.50 with the point and figure chart analysis, and we fully behind it. And we would suggest that you have a very close look onto OceanaGold, a great gold producer, conservative play in the gold markets in fantastic jurisdictions. So thanks for watching us, and bye-bye from Switzerland.